Are you tired of making loss? Are you tired of having a false entry? In this video, I want to share with you a simple strategy that you can adopt and you can find your entry in any kind of market situation. Being it an uptrend, being it a downtrend, being it a ranging market, this simple strategy can help you to make your entry using a single indicator, which is your commodity channel index and your RSI. And here we have our RSI. The period is 9, you apply to close, the style is 1 pixel, the level is 90, 10, 50, 20 and 80. And we have our commodity channel index, the period is 14, apply to typical price, high, low, close 3, style is 2 pixel and the color is black. And in this lesson, what I want to share with you is how you can make an entry combining your price action and the behavior of your commodity channel index based on what is on your chart. So let's dive into what we have to share. So here, looking at this, your first attention focus is going to be on the commodity channel index. And when I talk about commodity channel index, I'm referring to this indicator line that you are seeing. So the first thing we want to see on our commodity channel index is either it is at the level of 80 to 90 or 10 and 20. This is your number one focus. Secondly, once it gets to the level of 90 or 80, the next thing you want to see, you have to trail back to see if price is at a support zone or at a resistance zone. Just as in this case, we have a support zone because price previously was at this point, went up and then came down. So we have a previous level of support here before we have a previous level of support here before it was broken down to the downside. So we have established that, and price is at this level of 80, and we have established that we have a support zone. So what do? Secondly, now we want to see a signal. The only thing that will validate this point, this is the most important aspect of it. The validation of this point is our ability to find a signal. Something should be able to communicate to us that price will reverse, and that is the behavior of our candlestick pattern. So we want to see a reversal candlestick pattern. You can see from this first move, we have this particular candlestick that was rejected, closed bearish. This one also closed bearish. So with this first and second one, you can make your entry here. Your stop loss will be at that high, or you can wait for further confirmation, which of course we have, and we have this move all the way to this point. Number two, here now price pullback to this level of 10 and 20. So once price pull to that zone, what are you watching out for? There's a tendency that price is going to pull back. Remember, we say we are looking at how to buy and sell in any condition. And how do we know that price will pull back? Price is already here. This RSI commodity channel index line will push up out of this zone. So immediately price is here. The pushing up of this zone is as a result of price action on the chart. So what do? Once it begins to push up, you will mark that zone as your support. Right? You mark the zone as a support. And you want to see a bullish candlestick tick formation to give you a signal. And we have this first bullish candle. It did not engulf this previous one, so we don't have an entry. Then afterward, it came back again, and then we have this full bullish one that engulfed this previous candle up to this point. So here becomes our entry, our stop loss is below, and it moves some point a while. Here again, price is at this point, right? And here we have price that has come to this zone previously before now. So we have a support zone. So you mark out that zone. And then what happened next? Price is here. We want to see the behavior, the attitude of the buyer being communicated through price action of the candlestick. And here now we have it played out. Price trying to move up, there this rejection, and then this, and finally this third candle shows strength. So you buy, your stop loss is below, and you can see how it plays out beautifully, right? And so in the same way, another thing is divergence. Here we have price doing higher high, while our indicator is doing the opposite. So here now you can connect your trend line while we wait for the breakout of this particular trend line. And as we spot this divergence, this is the first one and this is it. So trading this alone, we don't have an entry, or entry would have been here, entry would have probably taken us out, but immediately we spot divergence. Already, what do? We will mark this as our resistance. And look at what happened. Price went up, gave us an inverted hammer, a bearish pin bar, rejected with this particular follow-up, and we are in our trade to the downside. So this is GBP USD, and this works perfectly well. You can see this and you can see this, and as well you can spot divergence in this scenario. Here we have our divergence, and you can see, so this works wonders. You can see price, and it plays out beautifully. All you need is an engulfing candlestick pattern, a reversal signal, and you make your entry. Okay, look at this. We have this here, and then we have this, and you can see how it plays out. So you backtest this and see how perfectly this strategy works. Look at this, and you can see the pin bar we have, and price pushed to the upside. This is a H4 time frame to show you how effective this works. I believe you have learned something new. Do not forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we publish our next video. Thank you for watching, and see you in our subsequent video.